Hello and great welcome. So in this particular session, we are going to pick up marathon MCQs, and I can assure you that after having gone through this particular session, you are going to have a supreme what we call confidence that you can face the MCQ section in your what we call paper, and moreover, you are well aware how critical and crucial it is because it constitutes a heavy chunk of your total marks. Correct? So let's go, and without wasting much time, come directly to the business end, and I hope that you have the actually notes. So we begin the session now. This is your question number one. It's pretty easy actually. As per AS1, which of the following is not a fundamental accounting assumption? You have already done it. Accounting standard AS1, it deals with what we call disclosure of accounting policy. You know actually what exactly the fundamental accounting assumptions are: going concern, consistency, and accrual. So in this case, question is asking which one is not a fundamental accounting assumption. So quite obviously, you are going to take a mark. Point number A. Accounting standards in India are issued by the Institute of Chartered Accountant of India. I need not require to tell you, at least at your level. Del Credere Commission is allowed to consigning. Why? Often consignor allows del credere commission to the consignee to safeguard himself from any possible risk of bad debts which may arise on account of credit sales. So if the consignor is providing or what we call allowing consignee del credere commission indirectly, it means now the consignee will undertake the risk of bad debts. So D will be your correct answer. Which of the following is not a part of the financial statement? Financial statement comprises of trading and profit and loss account, balance sheet, cash flow statement, and even notes. But trial balance, it is a mere statement. It is not a part of financial statement. Which of the following account is mainly prepared at the time of dissolution of the firm? We know that revaluation and goodwill and memorandum revaluation account deal with admission of a partner, but realization account deals with dissolution. Advertisement expenses are apportioned among the departments in the proportion of. Under departmental accounting, often there are some expenses which are given to us in an unallocated form. So such expenses need to be segregated and divided between or among the what we call various departments. Because advertisement expense deals with sales, so you are going to allocate it on the basis of sales of each department. If any stock is taken over by co-venturer, under joint venture, if any remaining unsold stock is taken over by what we call a particular co-venturer, as you remember, actually you used to put it towards the credit side. Indirectly, it means you're considering it as an income. So it is an income of the joint venture. From the perspective of the joint venture, it is an income. Contingent liability would appear, of course, as a footnote in the balance sheet. Name the principle involved in the classification of assets and what we call classification of assets as fixed and current asset. Indirectly, question is asking us why actually we classify the various assets into fixed and current asset because of going concern principle. Because under going concern principle, we presume actually the business will run forever. And so periodically we have to prepare the accounts, and for the same we need to categorize the assets into fixed and current assets. So here, because of going concern principle, it is the reason. The business is treated as a separate and as a distinct and separate entity because of business entity concept. Generally, sacrificing ratio is concerned with the situation of admission of a partner. I need not require to tell you. Which of the following discount is given in the sales invoice itself? In the sales invoice itself. Suppose our entity has sold correct goods to a customer. And let us say goods have been sold to the tune of rupees 50 lakh. As you know, it's a very heavy sale. So this customer has purchased from our entity 50 lakhs worth of goods. It's a heavy volume of goods which he has purchased. So generally, when there are bulky purchases, we offer them trade discount. So let us say we have offered him a trade discount of 5 lakh because he has done the bulk purchases from our entity. So when we are going to prepare the invoice, I'm going to write here selling price. Then I will subtract the what we call trade discount, and I will write 45 lakh over here in the sales invoice price. Indirectly, now our entity is going to ask the customer to pay us actually 45 lakh rupees. Correct? So indirectly, it also means when we offer trade discount, it is adjusted in the sales invoice itself. So your answer will be trade discount. Next one is interest charged by vendor in the hire purchase system is calculated on the basis of outstanding cash price. Interest is always computed on the cash price balance. Remember one thing. At the end of the accounting year, capital expenditures are shown on the asset side of the balance sheet. See, whatever assets which you write on the what we call asset side, those assets are nothing but your capital expenditure. accommodation bill is drawn under the bill of exchange. You have already gone through that sometime a particular party is in need of the funds, so they can draw what we call accommodation bill. So when one of the parties is in need of funds. Income and expenditure account, I need not require to tell you, is a nominal account. The concept that business is assumed to exist for an indefinite period of time and is not established with the purpose of closing down is referred to as going concern concept, obviously. Income and expenditure account of a charitable institution is known as income and expenditure account. Now, in question number 19, it is given goods are transferred from Department A to Department B at a price so as to include a profit of 33.1/3% on cost. So here it is given to you that there is a Department A and this Department A transfers goods to Department B. And when this department transfers the goods, it includes a profit of 33.33% on cost. First of all, you need to understand that 33.33% means 33.1/3% on cost. And so often in my regular classes, I have told you how to solve it. If I'm going to solve it, it will be equal to 1/3 on cost. It will be equal to 1/3 on cost. On cost, that means in the denominator there is cost and in the numerator there is margin. So now we come to know that cost is 3, margin is equal to 1. So obviously the selling price must be equal to 4. So rate of margin on selling price will be equal to 1/4. Number 1. Now further the question says that at the end of the year, closing stock of B includes 36,000 worth of goods which have been transferred by Department A. Whatever closing stock of B is there, that closing stock comprises of 36,000 worth of goods which have been transferred by what we call Department A. So what exactly is the stock reserve or unrealized profit in it? So in order to compute the unrealized profit, you will apply this rate and that will be equal to 9,000. So 9,000 will be your correct answer. Is it clear to you? In the hire purchase system, it is given. In the hire purchase system, interest charged by vendor is calculated on outstanding cash price. I need not require to tell you. Bad debts recovered 750. When we recover bad debts, our entry is cash account debit to bad debts recovered account. So your correct answer will be credited to bad debts recovered account. In the next question, actually, it is related to your subscription account. It is related to your subscription account. This is your subscription account. Almost in every question under NPO, I have prepared subscription account, if you remember. In order to prepare the subscription account, generally we write income and expenditure over here. Then total subscriptions received on the credit side. Then we write opening due. Opening due also means subscription in arrear at the end of the last year. And then we write closing due. Besides that, if there are some subscription in advance in the beginning of the year, we will write here. And if we have received some subscription for the next year known as closing advance, we are going to put it over here. In this question, it is given that this charitable organization has 250 members and each member is supposed to pay 5,000. See here, if I have got 250 members and each member is supposed to pay us 5,000 as the subscription. So logically, I should receive 12,50,000 in the current year from the members. That means my current year's income from the members should be equal to 12,50,000. Now question says that subscription received during 2021 were 11,25,000. During 2021, it means 2021 is your current year, 1920 is your last year, and 21-22 will be your next year. So in the current year, you have received subscription equal to 11,25,000. You are going to write here 11,25,000. Is it clear to you? Now further in this particular question, it is also given to you that whatever subscription which you received in the current year, 11,25,000, out of that 65,000 relates to 1920, that means last year. So some subscription in the current year we received for the last year. It means at the end of the last year, there were subscription outstanding to the extent of 65,000. So under opening due, I am going to write 65. Also question states that out of this 11,25,000 which we received in the current year, 25,000 relates to 21-22. That means the next year. So that means in the current year we have received some subscription which are related to the next year. So I'm going to write here 25,000. Is it clear to you or not? Now question is asking us what is the amount of subscription due at the end of the year. So if I'm going to actually just balance it out, it will be equal to 2,15,000. This will be my answer, 2,15,000. Is it clear to you or not? The next one is Shiva draws a bill on Sanat on 25th of October 2021 for 90 days. The maturity date of the bill will be. Now, in this particular case, what exactly the situation is that on 25th of October 2021, the bill has been drawn. And the period of the bill is 90 days. Problem is that bill period is not given in months, it is given in days. So sometime I have seen actually student confront a problem. Now, first of all, you need to understand that you have drawn the bill on this particular date. This is the month of October. And we know that total days in the month of October happens to be 31. So I'm going to add 6 more days. That means out of 90 days, 6 days have been taken away. Now 84 days are remaining. Now we have reached the what we call 31st of October 2021. Next month is November. And month of November comprises of 30 days. I will add 30 days. I will pluck out 30 days. So I am left off with 54 days. And now we have reached 30th of November 2021. Next month is December. So out of 54 days, 31 days I will take out. And now I will add 31 days here. So that means now we have reached 31st of December 2021. And still we are having 23 days. Now again I will take these 23 days and I will add it over here. So I will reach 23rd of January 2022. So after adding 90 days, we reached 23rd of January 2022. Now you should not forget to add 3 grace days. If I will add 3 grace days, it will be 26th of January 2022. But problem is that 26th January 2022 is a national holiday, gazetted holiday, correct? So if the holiday happens to be a gazetted holiday, national day, festival, Sunday, in that case, preceding day will become your maturity date. So in this case, 25th of January will be your what we call maturity date. In the next question, it is written that cash book debit balance of 112 brought forward as credit balance of 121. Now what happened actually in the cash book? We were supposed to write on the debit side as balance brought down 112. We were supposed to write 112, which we didn't. Instead, we committed a mistake. What we did? Instead of writing on the debit side, we committed a gross mistake. We wrote on the credit side as balance brought forward. We wrote on the credit side as balance brought forward, and even what we wrote 121. This is another mistake. So first of all, in order to rectify this, because unnecessarily you have written on the credit sides, so in order to rectify this mistake, you will have to write actually 121 on the debit side. And because you were supposed to write 112, which you haven't so far, so now again on the debit side, you will have to write 112. So indirectly, it means on the debit side, I need to write 233. Anything which we write on the debit side indirectly means we will have to add it. So that is the point. In this particular case, 233 will be added. Is it clear to you? As we know, accounting standard 16, it deals with what we call borrowing cost. So I need not require to tell you the basic crux of this particular standard is whether we should capitalize the what we call borrowing cost or not. 26 deals with accounting standard AS11. In this particular question, what exactly is the theme? Let me tell you. In this particular question, I will go through the question. Actually, it is given that on 9th of February, 2023, I will read the question, but just to make you understand better, first pay attention over here. On 9th of February, our entity might have actually sold some goods to a foreign customer, let us say for $10,000. This question is related to AS11. You know AS11 deals with what we call impacts or changes in what we call impacts of changes in foreign exchange rates. So as per this particular standard, the day on which we are going to do the transaction, now I'm going to record this transaction by applying the foreign exchange rate which is prevailing on this particular date. And question has given on this particular date $1 is equal to rupees 80. So I will multiply it with 80. And on this particular date, I will record this transaction in Indian currency at rupees 8 lakh. On 9th of February, we did the transaction. And when we are going to reach the end of the accounting year, that is on 31st of March 2023, the question has given that now your foreign exchange rate is actually 82. So at the end of the year, as we know, under AS 11, when we will reach the end of the year on the reporting, it is also known as reporting date. At the end of the year, we will have to record the transaction by applying the closing exchange rate. And the closing exchange rate happens to be 82. So now I will record the receivables at 8,20,000 because I have sold the goods. So indirectly, it is a receivable for us. So I will record the receivable at 8,20,000 and this exactly will be our answer. Now I will go through the question. The foreign currency receivable as per books of account $10,000 and $1 is equal to 80. That means we might have sold some goods for 10,000 and on that particular date the foreign exchange rate must be $1 is equal to 80. So that is why we have recorded it at 8 lakh. It is given in the question that on 9th of February you have recorded the transaction at 8 lakh. Now question is simply asking you on 31st of March at what value you are going to write this transaction. And it is given that $1 is equal to 82. So we will record it at 8,20,000. Although question hasn't asked, but you should know that because in this case it is a gain to you, the gain of 20,000 will be recorded under what we call a statement of P&L. Anyway, further it is given that main objective of average clause in a fire insurance policy is, in a fire insurance policy, as you know, when we compute the insurance claim, generally we apply average clause. The basic idea of average clause is, and actually average clause is generally implemented or inserted by the insurance company. The basic idea is that it wants the party to go for full insurance or it wants the other party to discourage the underinsurance. That means they should actually insure their items at full value. So this is the basic idea. This will be your answer. Actually, question number 28, 29, you can easily do because we have already done this question because they are repeated. Even 30 and 31 and 32. Correct? All these questions we have already done. Some questions have been repeated. Question number 34, the accounts related to expense or losses and income and gains are nominal account. It should be almost cakewalk for you. Which of the following will not appear in the profit or loss account? Obviously the capital. Capital appears on the liability side, but bad debts, provision for doubtful debts and rent paid will appear in the profit or loss account. Down payment plus installment including interest is known as hire purchase price. In question number 37, it is given original cost of a machine is 1,50,000. Original cost of the machine is 1,50,000. It is given to you. Number 1. Number 2, it is also given to you that residual value of the machine. Residual value of the machine is 10,000. This is also given. Further, it is given if the depreciation is charged at the rate of 10% per annum under written down value method, then depreciation for the third year will be. Now, depreciation rate is already given. Now, this information with respect to residual value will become irrelevant because rate of depreciation is given. So, at the end of the first year, I will simply apply 10% rate and I will get a depreciation of 15,000. Now, the written down value at the end of the first year is 1,35,000. Then at the end of the second year, again, I am going to charge what we call 10%. So, 13,500 will be the amount. And then written down value will be equal to 1,21,500 and at the end of the third year my depreciation will be equal to 12,150. So this will be my answer, 12,150. In question number 38, it is stated that P and Q enter into a joint venture sharing profits and losses in the ratio of 3:2. Correct? P purchased goods costing rupees 2 lakh. Now in this particular question it is given to you, just allow me a bit of a space. I think it is more than sufficient. Correct? So here I am going to prepare for you to make you understand better a joint venture account. Correct? This is the joint venture account and there are two co-venturer P and Q and they have agreed to share the results in the ratio of 3:2 and it is given that P purchased goods costing rupees 2 lakh. So these are the purchases of P, no doubt about that, but point here is that it is an expense, so it will be put on the debit side, 2 lakh. Further, it is given Q sold 95% of the goods for rupees 2,50,000. So P has purchased the goods and Q has sold the goods. Q has sold the goods and he has sold the 95% of 2 lakh, but he sold it for 2,50,000. We are more concerned with the amount of the sales that happens to be 2,50,000 in this particular case. P is entitled to get a commission of 1% on purchases. So P is entitled to a commission of 1% on purchases. So 1% of 2 lakh will be equal to 2,000. And Q is also entitled to get 5% commission on the sales. Q is also entitled to a commission, but again it's an expense. 5% of 2,50,000 is equal to 12,500. I will write here 12,500. Further, it is given that P drew a bill on Q for an amount equal to 80% of the original cost of the goods. First of all, you need to understand that original cost of the goods is equal to 2 lakh. Original cost is equal to 2 lakh. And 80% of this will be equal to 1,60,000. That means P has drawn a bill. P has drawn a bill. Although we need not require to actually do this, but just to make you understand. So P will pass an entry. P has drawn the bill. PR account debit to Q account 1,60,000, 1,60,000. This is the entry which will be passed by P. And further it is given he got the bill discounted for 1,50,000. P got the bill discounted. When we get the bill discounted, we will receive 1,50,000. 1,50,000. And I will write here discount account, that is equal to 10,000. And this bill will go to the bank from whom we are discounting the bill, 1,60,000. But none of these two entries are affecting the joint venture. However, whatever discount is there, that discount ultimately will be debited to joint venture account. See, in under joint venture, the discount is always debited to joint venture, but in consignment, discount is not debited, correct? So I will write here discount. So discount is equal to 10,000. Now we are going to compute the what we call total profits. If I am going to compute the total profits, I think it will be equal to 25,500. Question is asking, what is the share of profit of P? So 25,500 into 3 divided by 5, that is 15,300 will be share of P, 3/5. So this will be your answer. 15,300 will be your answer. Is it clear to you or not? In question number 39, it is stated that goods of the invoice value of 2,40,000 sent out to consignee at 20% profit on cost, loading amount will be. Now this is the invoice value of the goods given to you. So in order to know the amount of loading, you will have to apply the rate of loading on invoice price. You know, in this particular question, the cost price is, the rate of profit is on cost. So first of all, you will presume cost as 100 and your margin or loading is equal to 20 and your invoice price will become 120. So rate of loading on invoice price will be 20 by 120 or 1 by 6. So you will apply 1 by 6 to 2,40,000. It will give you 40,000. This will be your answer. In question number 40, it is given to you that Shiva purchased a laptop on hire purchase system. He purchased one laptop on hire purchase system and as per the term, he is required to pay 7,000 down payment. So Shiva has purchased a laptop and Shiva has paid a down payment of 7,500. So you are going to write here 7,500. And at the end of the first year, he will pay the first installment, that is equal to 10,000. Then 7,500 he is supposed to pay at the end of the second year. 7,500 at the end of the second year and 12,500 at the end of the third year. So at the end of the third year, he is supposed to pay 12,500. This is the scenario in this particular question. Further, it is given interest is charged at 12% per annum. Now, in this particular question, rate of interest is given to you. Rate of interest is 12% per annum. What we mean by rate of interest? So often I have told you, rate of interest is always on cash price. Indirectly, it means if the cash price portion is 100, your interest is 12. Rate of interest is always on cash price. Interest is 12. So your hire purchase installment will be equal to 112. Now, in this particular question, cash price is not given. If you remember, we have had a lot of discussion actually when we did hire purchase. Over there, I told you that in case if the cash price is not given, for your first target should be to convert the rate of interest into hire purchase installment. So rate of interest on hire purchase installment will be 12 by 112. This should be your first step. Is it clear to you? Now question says that interest payable with the, you have to compute interest payable with the installment at the end of the second year. Indirectly, question is asking you what is the amount of interest which is included in the second installment. This is your second installment. So first of all, we have to find out interest for the last installment. When cash price is not given, as I told you, in that case we have to go via reverse approach, correct? So first of all, 12,500, if I want to compute the interest will be equal to 12,500 into 12 by 112. Into 12 by 112. It will be equal to how much? 12,500 into 12 divided by 112. That comes to 1340. Interest amount is 1340 approximately. This is the amount of interest, correct? And if I am going to subtract 1340 from 12,500, it will tell me the cash price portion of this installment. So cash price portion will be 12,500 minus 1340. That comes to 11,160. So as far as your first installment is concerned, your interest, third installment is concerned, your interest is this much and cash price portion is this much. Now I will have to compute the interest on the second installment. In order to compute the interest on the second installment, first of all, I am going to write the installment amount 7,500, number one, correct? Then I am going to add 11,160, the cash price portion of the third installment. Is it clear to you? Now the total will be 18,660. Now 18,660, now I am going to compute the interest, 12 by 112. And this will be equal to into 12 divided by 112. That comes to 1,999. So as far as interest on second installment is concerned, that is equal to 1,999. This is the correct answer. And if the question had asked, what is the cash price portion? 7,500 minus 1,999. That would become the what we call cash price portion of the second installment. Is it clear to you? As far as 41 is concerned, in this particular question, let's see actually what exactly the things are given. KC has purchased a machine from JPS on hire purchase system, whose cash price was 8,64,000. Now, in this particular question, you are being given that cash price is 8,64,000. Cash price is 8,64,000. Cash price is given to you as 8,64,000. Further, it is given that we are supposed to make a payment of down payment. Down payment is equal to 2,16,000. Down payment is 2,16,000. And then balance in 3 annual installment of 2,88,000. 2,88,000, 3 installments. 2,88,000. So besides the down payment, we are supposed to pay 3 installment of 2,88,000. So by adding the installment to the down payment, I will get the hire purchase price 216 plus 288 plus 288 plus 288. That is equal to 10,80,000. 10,80,000. Now I am going to subtract 10 lakh. Now I am going to take the difference of these two. 1080 minus 864. It will tell me the total interest. Difference between cash price and hire purchase price is your interest. This is the amount of interest. Is it clear to you? This is the amount of interest. Now, In this particular question, you must have noticed actually the rate of interest is not given. Rate of interest in this particular question is not given. Question says that the amount of interest included in the first installment will be. So what is the amount of interest which will be included under the first installment? If you want to compute quickly, just see the total installment. How many installments are there in this case? Besides down payment, first installment, second installment, third installment. If rate of interest is not given, you simply write here this way around, ratio, but you have to reverse it. Ratio will become 3:1 if you want to do it quickly, correct? Total installment 1, 2, 3. First you can write it this way, total installment 1, 2, 3, and then you reverse it. This will become the ratio. Ratio will be equal to 6. Now, we have already computed the interest. Interest is actually 2,16,000. So 2,16,000. In the first installment, my interest will be 3/6. That is equal to 1,08,000. So 1,08,000 will be the answer, right? And in the second installment, 2,16,000 into 2/6. And similarly, in the first one, 2,16,000 into 1/8. At the end of the accounting year, capital expenditure are shown, I need not require to tell you, on the asset side, because whatever item which we write on the asset side, basically those are capital expenditure, more or less. Memorandum joint venture account is prepared. Now, as far as joint venture is concerned, you know better than I, under joint venture, actually, there are 3 sorts of methods. Correct? There are 3 sorts of method, if you remember. One, when separate set of books are maintained. It is also known as joint banking method, when separate sets of books are maintained. Under the second method, suppose A and B are 2 co-venture, then each party will maintain the record. For example, A will maintain joint venture account and he will also maintain other co-venture account. Similarly, B will maintain joint venture account and other co-venture account. We say that it is under the second case, record is maintained by each party. Besides that, there is another method, third method. In order to understand it, let us say there are 2 co-venture. In this case, both these fellows will record only their transaction. For example, A will record his own transaction, and A will prepare joint venture with B account, and in this account he will record his own transaction, not the other party's transaction. Similarly, B will prepare joint venture with A transaction, and he will record his own transaction. Is it clear to you? And then in order to derive the profit, they will prepare what we call memorandum joint venture account. Correct? Is it clear to you? So, in this case, your answer will be C. 44th, on 1st of 2024, X took delivery from Y of 5 machines on hire purchase system. 4,000 being paid on delivery and the balance 5 installment of 6,000 each. We have paid 4,000 on delivery. And we are supposed to pay 5 installment of 6,000 each. So 6,000 into 5, total 30,000 more I am supposed to pay. So that means the total hire purchase price is equal to 34,000. And installment is payable annually on 31st of December. It is also given. The vendor company charges interest at 5%. It is also given that the vendor company charges interest at the rate of 5%. The cash price of 5 machines is 30,000. Now this is the hire purchase price which is given to us, which we have computed, and now the cash price of the 5 machines is equal to 30,000. Now question is simply asking us what is the amount of interest. So amount of interest is difference between these two, that is equal to 4,000. So your interest will be equal to 4,000 in this case. 45. In hire purchase system, cash price plus interest is known as hire purchase price of the asset. I need not require to tell you. Which of the following is true in respect of pro forma invoice price? Here it is written, it is a document sent by consignor to the consignee. This is correct. Only details of goods returns are recorded. It is wrong. it acts as an evidence of remittance. Again, it is wrong. So generally it is a document which is sent by the consignor to the consignee, wherein consignor will tell to the consignee that what exactly will be the price, what exactly is the quantity, what exactly is the time period within which you will have to actually dispose of these goods. Correct? Then 47 states that income and expenditure account shows subscription of 8,20,000. Income and expenditure account is reflecting total subscription. That means income and expenditure account is already given, and on the credit side 8,20,000 is also written over there. Now question states, because it is given that in income and expenditure subscription is already given, so I will write in the subscription account to income and expenditure account 8,20,000. I am going to write here 8,20,000, isn't it? This is my subscription account. This is our subscription account. Subscription accrued in the beginning and at the end of the year were 74,000 and 1,92,000. So subscription accrued or outstanding in the beginning is 74,000. We will write over here. And outstanding at the end of the year is also given 1,92,000. I am going to write here 1,92,000. Further, it is also given 74,000, subscription received in advance at the end of the year were 1,96,000. At the end of the year, subscription have been received in advance to the extent of 96,000. So we are going to write here 96,000. That's all what is given to us in this particular question. No opening advance. And question is asking us what exactly is the amount of subscription which we have to write under receipt and payment account. So this is the amount by cash. When you are going to tally it, you will get 7,98,000, no problem. That means total amount of subscription which we must have received in the current year is 7,98,000, and it will be reflected on the debit side of receipt and payment account. What is the full form of GAAP? Generally accepted accounting principle, as you know. So alternative A will be your answer. 49. From the following detail, estimate the capital as on 31st of 3/2024. Generally, if such questions are asked, my advice to you is to prepare a capital account quickly, correct? So that within a flick of a second, you can get the answer. This is your capital account. Capital account. Here it is written that on 1/4/2023, balance in capital account. This is the balance brought down 4,10,000. In the beginning of the year, you have capital of 4,10,000. Then drawings were 40,000. When proprietor will withdraw the amount, obviously the capital will reduce. So we will have to write the drawings on the debit side 40,000. I am going to write here 40,000. Then profits during the year is equal to 50,000. So obviously any profit is there, it increases the amount of capital we have to credit at 50,000. So now you can simply tally it to get what we call your closing capital. So question has asked what is the amount of closing capital, that is 460 minus 40, that is equal to 4,20,000. So 4,20,000 will be your answer. Is it clear to you? Then it is given that as on 31st of March 2024, debtors and additional bad debts were as on 31st March 2024. Just wait. As on 31st of March, this is our 31st of March 2024, and it is stated that on this particular date, debtors equal to 8 lakh. Debtors is equal to 8 lakh. It is given that debtors is equal to 8 lakh. Also it is given, and additional bad debts are 10,000. Debtors are 8 lakhs. And additional, because it is written additional bad debts, that means it is not yet adjusted in the debtors account. So first you will have to subtract the additional bad debts. So additional bad debts you will have to subtract. Additional bad debts is equal to 10,000. So you are going to subtract 10,000. After subtracting the same, now you get 7,90,000. 7,90,000. Correct? If the provision for bad debts is made at 5% on debtors, then the amount of such provision will be. Now question is asking, What will be the amount of provision? So provision for doubtful debts will be 5%. So 5%, if you are going to compute, it will be equal to 39,500. So 39,500 will be your answer. Is it clear to you? 51. Which of the following is not a feature of trial balance? Let's see. First, it is written, it is a list of debit and credit balances which are extracted from the ledger account. Yes, it is correct. But question is asking which is not a feature. So point number 1 is a feature. It does not provide arithmetical accuracy which can be determined by audit. This is not a feature of trial balance. Correct? And point number C, it is not an account, it is only a statement account. Again, it is a feature. All the transactions are primarily recorded in this book, and hence it is a primary book of entry. All these are features, but point number B is not the feature. 52. Purchase goods from Mr. R for 3,600, but wrongly recorded as 6,300. Now, wrongly recorded as 6,300 to the debit of Mr. R. Oh my God. Actually, what happened? You purchased the goods from purchases account debit to R account. You should have recorded this entry this way. As per this entry, the R's account should have been credited by 3,600. But unfortunately, you did not pass this entry. Correct? Instead, what you did, you debited R and you debited him by 6,300. This is the mistake which you have created. This is the error. This is the mistake which you have created. Now, in order to rectify the same, first of all, I will have to credit him so that this gets neutralized. Isn't it or not? Because we debited him 6,300 unnecessarily, so I have to credit him now. And I should have had given him a credit of 3,600. So, indirectly, in order to rectify this mistake of debiting him by 6,300, I will have to give him a credit of now 9,900. So, this will be the correct, what we call alternative. If a stock is taken over by joint venture, it is treated as an income of the joint venture. I need not require to tell you. Further, it is written X draws a bill on Y for 1,80,000 for mutual accommodation in the ratio of 2:1. Correct? X got it discounted for 1,69,200 and remitted the proceeds 1/3 to Mr. Y. How much money should be remitted by X to Y at the time of maturity so as to enable Mr. Y to honor the bill? First of all, you need to understand in this particular case that X is the person who has drawn a bill unnecessarily on Mr. Y. Not unnecessarily, but my point is that in this particular case, Y hasn't. Actually, X hasn't sold any goods to Mr. Y. So this bill is drawn for the mutual accommodation. So X has drawn a bill. So now Y has become the acceptor of the bill. So definitely now X will receive a bill from Mr. Y and the amount of bill is equal to 1,80,000. The basic idea is that I have drawn a bill upon you and you are going to accept it. I will receive the bill. Now I will discount it from the bank. Now I got the bill discounted from the bank and now we have got the cash. So whatever cash which we have got, it is given in the question that 1/3 has been remitted to Y. That means 60,000 worth of cash will be given to Y and 1,20,000 will be kept by X. But what you need to understand is that because bill has been accepted by Y, that means on the maturity date, Y is supposed to pay 1,80,000 to the party who will come along with that particular bill. Of course, the bank, because this bill has been discounted. Now this bill is with the bank and bank will approach on the maturity date and ask Y to pay. Now, 1,80,000 worth of bill has been drawn upon Y and 60,000 is already given to Y. So it is the duty of the X to deliver 1,20,000 before the maturity date to Mr. Y so that Mr. Y can honor the bill. So your answer will be 1,20,000 in this particular case. Is it clear to you or not? Correct? So we'll take half a minute's break, and after only half a minute break or 1 minute break. After that we'll continue. So welcome after the break, and now we are going to pick up question number 55. Herein you are given that due to retrospective effect on revision of salary of employees, the arrears of salary relating to past year payable in current year is ordinary item requiring separate disclosure. Sometimes government announces schemes like DA, etc. On account of that, what happens actually in the current year, the amount of salary which an entity is supposed to pay actually goes up. So even though it is something related to past year, but it is not a prior period item. It is considered as an ordinary item. So that is why an ordinary item, and it will require a separate disclosure also. In question number 56, lots of questions have been asked, as you can see, with respect to subscription. Subscription of 6,25,000 had been shown in income and expenditure account. Now, this should be extremely easy for you. I need not require to tell you, because so many questions you have already done with respect to subscriptions. Correct? So this is your subscription account, and it is given to you that 6,25,000 has already been shown under income and expenditure. So you are going to write subscription 6,25,000 to income and expenditure account. And now some more information is given to you. First of all, this information is with respect to subscription outstanding, and this is related to subscription received in advance. As you know that opening outstanding we have to write here. So I am going to write here opening outstanding, that is 55,000. 55,000. And then we are being given closing outstanding. I will write closing outstanding equal to 72,000. 72,000. Then opening advance 31,000. I am going to write here opening advance 31,000. And then we are being given closing advance as 37,000. So I will write here closing advance 37,000. Now question is asking us what is the amount which we need to reflect in receipt and payment account. This figure will show that this much of amount we must have received in the current year. If we are going to balance it out, it will be equal to 6,14,000. So 6,14,000 should be your correct answer, right? 6,14,000, correct? Further, you are being given that Aarti Limited purchased a machine on hire purchase system for a cash price of rupees 5 lakh to be paid 78,700 down, and the balance by 3 equal annual installment of 2 lakh each. Till up to this particular point of time, we may say that cash price is equal to 5 lakh. Cash price is equal to 5 lakh. And we have made a payment. Now we can compute hire purchase price. Hire purchase price is down payment 78,700. And we are supposed to pay 3 installments of 2 lakh each. 3 installment of 2 lakh each. That means 6 lakh more. So total amount, total hire purchase amount is equal to 6,78,700. 6,78,700. Of course, the difference will tell you the interest. Interest will be equal to 1,78,700. This is the amount. This is the amount of interest. This is the amount of interest. Just allow me. Hello. Right. बढ़िया है. कौन बोल रहे हैं? अरे भूल नहीं रहते. मैं अभी ना वो क्लास ले रहा था. अभी मैं थोड़ी देर के बाद फोन करना मेरे को भी. ठीक है. हाँ. सीए इंटर के लिए. ठीक है. शायद आ गया. उसका नाम शेरवानी नाम था शायद. राइट. आ गया. हाँ. थैंक यू. ओके. Sorry, extremely. Sometimes there are phone calls, you simply can't help it. Anyway, so question here is asking actually if interest is charged at the rate of 20% per annum, then amount of interest payable in the second installment will be. Actually, even in this case, as you must have noticed, that we can easily find out because here a rate of interest is given. We are also being given cash price. We have the higher purchase price and rate of interest is also given. So in this case, first of all, what we would need to do, your cash price, you will have to write your cash price actually is 5 lakh. Cash price is 5 lakh. Correct? And then we write here gross installment, then we write here interest, and then we write here cash price portion. Our down payment is 78,700. If I am going to subtract down payment from cash price, we will be left up with 5 lakh minus 78,700, that is equal to 4,21,300. 4,21,300. So many times I have told you, this is down payment and no interest is involved in it. This entire payment is meant for cash price, and interest plus cash price portion is your gross installment. Correct? Now we come over to the first installment. The first installment is 2 lakh. First of all, let me write it over here, 2 lakh. Now, what is the amount of interest included in this installment? For that, I will have to compute 20% of 4,21,300. 20% is rate of interest. So, into 20%, the 20% comes to 84,260. 84,260. Now, I will subtract 84,260 from 2 lakh. So, that means cash price portion is 1,15,740. This is cash price portion. Now I will subtract cash price portion 1,15,000, 1,15,740. Is it clear to you? Then we are left up with 3,05,000. This is cash price outstanding balance, 3,05,560. Now we come over to the second installment. The second installment is 2 lakh. Now I want to compute the interest. The interest will be computed at the rate of 20%. So into 20%, the interest comes to 61,112. In fact, the question is asking only the interest in the second installment. So this will be your interest of the second installment. 58. Which one is correct one? Fundamental accounting assumption as per AS1 is going concern, consistency, and accrual. These are 3 fundamental accounting assumptions, and on lots of occasions we have seen actually this question has been asked. Which of the following commission is allowed by the consignor to the consignee to encourage the consignee to put up hard work in introducing a new product in the market? See, under consignment we have seen actually that consignor provides commission to the consignee, no doubt about that. One is known as general commission. For example, in the question it is given that consignee is given 10% commission. This is known as general commission. General commission means this is normally given in this what we call type of trade. This is the normal trade practice. This is general commission. Sometimes we give him overriding commission. Overriding commission is given so that he puts up lots of effort, hard work, etc. Is it clear to you? So overriding commission will be your correct answer. Besides that, we give him del credere commission. As you know, del credere commission is given to safeguard himself from any what we call bad debts which may arise on account of credit sales incurred by the consignee. Now, under question number 60, it is given outstanding salary is shown as, see, outstanding salary, as you know, first of all, you adjust it in the profit or loss account by adding back to the what we call item, and then you also reflect it in your balance sheet. So that is why your correct answer will be both B and C. A resource owned by the business with the purpose of using it for generating future profits is asset, no doubt about that. On dishonor of a bill of exchange that has been discounted, noting charges are initially paid by bank, no doubt about that. The party which is having the bill, and if the bill is dishonored, then that party will have to prove that we did not receive the amount, and for that they will have to get the facts notified from the notary and they will have to pay some notary charges. 63. If Kaveri's acceptance, which was endorsed by us in favor of Salim, is dishonored, then the amount will be debited in our books. See here in this case what is happening. Kaveri's acceptance. We might have received a bill from Kaveri. Correct? So we must have written an entry BR account debit to Kaveri account. And this acceptance of Kaveri, correct, this acceptance of Kaveri has been endorsed by us to a person known as Salim. So next entry will be Salim account debit, that is endorsee account debit to BR account. We have endorsed this bill to Salim. But now this bill is dishonored. And so many times under bill of exchange I have told you, whenever your bill will get dishonored, you will always debit the original debtor. Your original debtor is K because you have received the bill from K. So for dishonor entry, you will debit the original debtor, that is K account, and you will credit the person who is having the bill at this moment, because Salim is having the bill. So you are going to now credit Salim. So in this question, it is asked whom you are going to actually debit when the bill is dishonored. Of course, you are going to debit Kaveri, and at the same time you are going to credit Salim, no doubt about that. 64. Sham and Ramya entered into a business of buy and sale of food grain for a period of 1 year only, sharing profits in the ratio of 2:4. This agreement is a joint venture because it's a short partnership. Is it clear to you? Which of the following error is an error of what we call omission? Which of the following is an error of omission? Omission means sometime when you skip, when you forget. Sale 5,000 written in the purchase journal. It is not an error of omission. Wages paid to Shyam debited to his account. Again, it is not an error of omission. Wages paid to Shyam debited to his account. So it is an error of principle. It is not an error of omission. The total sales journal has not been posted to the sales account because here you forgot that total of sales journal need to be posted to the sales account. So this is a case of what we call error of omission. 66. As on 31st of March 2024, debtors and additional bad debts were 8 lakh and 10,000 respectively. If the provision for bad debts is 5% on debtors, we have already done this particular question. Your answer will be 39,500. The party who is ordered to pay the amount is known as drawee. Of course, if I am going to draw a bill upon somebody, that party will become a drawee. Correct? No doubt about that. 68. Opening and closing balance of debtors are 30,000 and 40,000 respectively. Now, logically, in this question, opening and closing balances of debtors are given to you. Opening and closing balances of debtors are given to you. So, this is your debtors account. This is your debtors account. Is it clear to you? Opening balance of debtors is given to you as 30,000, number 1. Number 2, closing balance is also given to you. So, balance carried down is 40,000 is also given. Cash collected from debtors is equal to 2,40,000. So, you are going to write here cash collected 2,40,000. Under branch accounting, you have prepare debtors account so often, and then discount allowed in this particular case is 15,000 for the prompt payment. So discount, of course, discount is allowed to the debtors so that they make the payment promptly. 15,000 is the amount of discount, 15,000. Then we have bad debts also in this particular case. So bad debts is equal to 10,000. I am going to write 10,000. The question is asking us total goods sold on credit are. So I will have to now tally it, and I will get 2,75,000 as the balancing figure. This will become my credit sales. So this is exactly what the question is asking. This will be your answer, 2,75,000. Donations received for a specific purpose. Of course, we treat it as capital receipts, correct? In question number 70, it is given opening inventory 9,600. Purchases less returns is 11,850. In order to get the answer, you can simply prepare a trading and profit and loss account in this particular question. Correct? Trading and profit and loss account to get the correct answer. We know that opening inventory or opening stock is written on the debit side, 9,600. I am going to write here. Then we have net purchases net 11,850. Besides that, we are being given salary of 3,200. Now salaries will be written under profit and loss account. So salaries I am going to write here 3,200. Then we are being given wages. Wages is a direct expense, so we are going to put it over here. Wages is equal to 750 in this particular case. Commission on purchases. So commission on purchases you are going to write here. Commission on purchases will be considered as direct expense 200. Carriage outward. This is carriage outward. So carriage outward will be written over here 300. Then sales 24,900. You are going to write sales as 24,900. Then closing inventory is also given to you. Closing stock, that is 3,500. And you are being given carriage on purchases. Carriage on purchases will be written over here. Carriage on purchases, that is 1,000. Now question is asking us to find out the gross profit. So now by balancing the same, you will get the gross profit, and that must be equal to 5,000. Correct? So 5,000 will be your answer. In the next question, it is given that bad debts are apportioned among the department in the proportion of. Honestly speaking, generally the bad debts are allocated on the basis of sales. However, if in the question besides sales, it is also given number of units sold by each department. So in that case, it is better to allocate bad debts on the basis of number of units sold by each department. Correct? A plant worth 80,000 has been insured for 60,000. So you have insured a plant for rupees 60,000. Correct? A plant worth rupees 80,000 has been insured for 60,000. Insurance policies for 60,000. The loss on account of fire is 50,000. However, loss of plant is 50,000. So how much claim insurance company will admit? That is 50,000 into 60,000 divided by 80,000. So this is how you are going to compute it. Is it clear to you? So in this case, 37,500 will be your answer. 73. CP Point sells computers on hire purchase basis at cost plus 25%. The terms of the sales are 10,000 down payment and 8 monthly installment of 5,000 each for each computer. See, in this particular case, question is telling us that this entity sells computer, and when it sells computer, it asks for down payment of 10,000, and the purchaser will have to pay 8 installment of 5,000 each for each computer. 8 installments. Suppose if I'm going to buy a computer, I will have to pay 10,000. I have to pay also 8 installment of 5,000 each. So total installment amount will be equal to 40,000. And remember one thing, down payment plus total installment is the higher purchase price. So higher purchase price is 50,000. In this case, question is simply asking you what is the higher purchase price. So higher purchase price will be your 50,000. Is it clear? As per AS 16, all of the following are qualifying assets except. If you remember, under AS 16, we have talked about this particular fact that manufacturing plant and power generation facility, actually generally they take a prolonged period of time before they get mature or before they become ready for use. So that is why they are qualifying asset. Inventories that require substantial period of time. Obviously, any such item which will require substantial period of time will be considered as a qualifying asset. But assets which are already ready for use or ready for sale are already qualified. They are not qualifying. So they cannot be considered as qualifying asset. Is it clear to you? So C will be your answer. Areas involving different accounting policy by different enterprises. Under AS1, I have given you lots of examples, nearly 10 or 12 examples, where the entities can apply what we call different accounting policy, like with respect to valuation of inventory, with respect to intangible asset, with respect to recognition of profit on long-term loans, we can have different policies. So your answer will be all of these. Which of the following is not a qualitative characteristic of accounting information? Under accounting framework, I have talked about this particular fact that reliability, comparability, and understandability are three important qualitative characteristics. But materiality is definitely not a qualitative characteristic. So materiality will be the correct answer in this case. Under overview of Ind AS, we have started with this particular sentence that basically Ind AS are principle-based accounting standard. An increase in which of the following account will be recorded on the debit side? Rent received. Now, rent received is not an asset, it is a liability, correct? It is an item of credit side, you can say. So, your correct answer will be building, because only with respect to asset, if the value will increase, we are going to write it on the debit side. Which of the following is not an error of principle? Which of the following is not an error of principle? Purchase of machinery debited to purchases account. It is an error of principle. Sale of old furniture credited to sales account. Again, it is an error of principle. Repairs on overhauling of machinery debited to machinery account. Again, it is an error of principle. Now, question is asking which one is not an error of principle. Cash receipt from Rana posted to Jana. Now, this is definitely not an error of principle. 80. Income tax paid by sole proprietor or sole trader is considered as a personal expense. So it is reflected as a deduction from capital in the balance sheet. So that is why C will be your correct answer. A lease, which is generally not cancelable, covers full economic life of the asset, is known as finance lease. Generally, finance lease is not cancelable, correct? It cannot be cancelled. And it covers majority period of economic life. Remember one thing. At the end of the accounting year, advances to suppliers. Suppose if you have given some advances to the suppliers, correct? So it is a sort of what we call advances given. So it is an asset for you. So it will be reflected as what we call asset on asset, no doubt about that. At the end of the accounting year, subscription received in advance in outstanding rent of a club will be shown in the balance sheet. Subscription received in advance. If you have received subscription received in advance, it is an income received in advance, it will be written on the liability side. Similarly, outstanding rent is an expense. You are supposed to pay. Again, it will be reflected on the what we call liability side. So both will come on the liability side. 84. Property, plant and equipment appeared at 50 lakh in the trial balance of Nirav company, which is not a going concern. Under accounting standard 1, actually, we have talked about this particular fact that if you are not a going concern, then all the assets must be reflected at net realizable value. If an entity is not a going concern, then it must reflect the asset at net realizable value. Here it is given property, plant and equipment are subject to depreciation of 10% on written down value basis. Correct? Realizable value of property, plant and equipment is 80% and realizable expenses are 5%. At what amount depreciation will be shown in the income and statement of Nirav company? Now you need to understand that property, plant and equipment presently is appearing at a cost of 50 lakh in the trial balance. This is the cost, 50 lakh. Now below the question says that, and it is subject to a depreciation of 10% on written down value, no doubt about it. But further question states that realizable value of the property and property, plant and equipment is 80%. Now the realizable value is 80%. So 80% of 50 lakh will be equal to 40 lakh. Its realizable value is 40 lakh. No doubt about that. Realizable value, just wait. Realizable value is 40 lakh. Correct? Now question also says that realization expenses amount to rupees 5%. Realization expenses will be subtracted from the realized value. So 5%, if I am going to subtract, that will be equal to 2 lakh from 40 lakh. So realizable value is 38 lakhs. realizable value is 38 lakhs. Because this item which is appearing at 50 lakh, now its net realizable value is 38 lakh. So this item must be reflected at 38 lakh in the balance sheet, but the question is asking what is the amount of depreciation which we need to show. So amount of depreciation will be difference between this cost and what we call 38 lakh. So 12 lakh will be your correct answer in this case, even though none of the above is marked, don't worry about that, but 12 lakh. So now we will pick up question number 85, and in this particular question it is given to you that cost of the goods available for sale is 2 lakh. And total sales is equal to 1,60,000. And opening stock of goods is given to you 40,000, and gross profit margin is 25%, and closing stock of goods was, question is asking this much. Now in order to do this particular question, first of all you need to understand that total sales given to you in the question is equal to 1,60,000. And because gross profit margin is given, gross profit margin is 25%. Gross profit margin is always on sales, correct? Gross profit margin 25% means 25% on sales. Gross profit margin, if you are going to subtract from total sales, you are going to get actually 1,20,000. That means whatever goods which you sold, the cost of those goods, this is cost of goods sold. You sold 1,20,000 worth of goods for 1,60,000. It means cost of goods sold is 1,20,000. Correct? Now in this particular question you are being given that cost of goods available for sale. Total cost of the goods which was available for sale was 2 lakh. Out of that, you have sold 1,20,000 worth of goods. Total cost of the goods which were available for sale was 2 lakh. And out of that, goods 1,20,000 have been sold out. That means the closing stock is 80,000. That means this much of stock is still remaining. So that is how you will have to deliver the answer to this particular question. Question number 86 states that X Limited entered into an agreement with Y Limited for sale of goods costing rupees 2 lakh at a profit of 20% on sales. So in this particular question, there is an entity by the name of X Limited, and it entered into an agreement with another company Y Limited whereby X Limited will sell the goods 2 lakh at a profit of 20% on sales. Correct? At a profit of 20% on sales. Because this profit rate is given 20% on sales, this rate of profit is given on sales. Selling price is 100, margin is 20, so your cost will be 80. So rate of profit on cost will be 20 by 80. That is 1 by 4, correct? If I am going to apply 1 by 4 to it, that means, because this is the cost of the goods, whereby it entered into an agreement that it will sell the goods costing 2 lakh, but at a profit of 50,000, that means total sales will be equal to 2,50,000. Anyway, number one, this sale transaction took place on 1st of February 2022. So on 1st of February 2022, this transaction took place, and on the same day, X Limited entered into another agreement with Y Limited for repurchasing the goods at 2,80,000 on 1st of August 2022. First, we sold the goods to Mr. Y for 2,50,000, and then we entered into another agreement with the same party that we will repurchase these goods from you on 1st of August 2022 for rupees 2,80,000. We will repurchase these goods. We sold the goods for 250, and we will repurchase the goods for 2,80,000. The predetermined repurchase price covers inter alia the holding cost of Y Limited. because we have sold the goods to Y Limited, so Y Limited will have to keep the goods for till up to 1st of August, because on 1st of August we will have to repurchase the goods. So some cost will be incurred by Y to keep the goods in their custody. So that is known as holding cost. So that is why they will sell it back to us for 2,80,000. Calculate the amount of revenue as per AS9. Now, it seems for a while that there is a profit to Y Limited for 30,000, but no. As per AS9, it is not a case of revenue. It is a case of refinancing, correct? So, in this case, revenue will be considered as nil as per AS9. No revenue will accrue. It is known as case of what we call refinancing. 87. The construction of a factory building was completed on 1st of April 2023 at a cost of 56,50,000. A sum of 45,000 had been incurred for the construction of the temporary huts for storing building materials. Insurance premium of 56,500 paid on 5th of April 2023. The capital and revenue expenditure will be. See, in this case, first of all, you need to understand that 56,95,000 which you spent in the construction of building will be considered as what we call your capital expenditure, no doubt about that. And besides that, because you are constructing that building and in connection with that, you are spending 45,000 for what we call constructing the temporary huts for storing the building material. So even that expenditure will also be considered as capital expenditure. However, insurance premium which you have paid, it is not related to construction of building. So it will be considered as revenue expenditure. So total capital expenditure will be 56,50,000 plus 45, 56,90,000, and 56,500 will be your revenue expenditure. Last year this question was asked. If a receipt of 21,500 for interest has been recorded in the books as a payment of 12,500 interest, the profit would show. Now, in this particular case, you need to understand that there was a receipt of interest of 21,500. You were supposed to write it on the credit side, but you did not write. In fact, you have reflected it as a payment of 12,500. You have reflected it as a payment of 12,500. So if you have reflected it as a payment of 12,500, the question is asking what is the impact on the profit because of this mistake. You did not write 21,500. So your profit got reduced by 21,500 because you forgot to write. And you unnecessarily wrote 12,500, so your profit again reduced by 12,500. So on account of this particular mistake, by not writing 21,500 on the credit side and by writing 12,500 unnecessarily on the debit side, our profits are declining by 34,000. So our correct answer will be 34,000 decline in profit. Shiva received a bill of 58,550 from Vijay and endorsed it in favor of Makku. Now, in this particular case, Shiva is receiving a bill and he is receiving a bill from Vijay. And the bill amount is 58,550. Now, this bill has been endorsed by Shiva to Makku. Interesting name. To Makku. On the date of maturity, the bill was dishonored and for it noting charges of 450 paid by the holder. I have already told you, because this bill is in the hands of the Makku and Makku did not receive the payment. So Makku was supposed to receive the payment of 58,550 which he didn't. So now he had to pay actually 450 as what we call noting charges because he will have to prove that he did not receive the money. So ultimately it means in this particular case the total amount is 59,000, I think so. So in this case Shiva will be debited. I have told you whenever the bill will get dishonored, the original debtor will be debited. So Vijay will have to be debited, number one. Vijay will have to be debited, and at the time of dishonor, the Makku will have to be credited. In this case, Shiva will debit Vijay by 59,000. Yes, Vijay will be debited by rupees 59,000. Is it clear to you? That means now we have to receive 59,000 from Vijay and we will have to give 59,000 to Makku. 90. Joint venture with XYZ account is opened. I told you just a moment ago when I was talking about joint venture, there are three systems. One is separate. One is when separate set of books are maintained, also known as joint banking system. Besides that, there is a system where each party is going to record the transaction, correct? But they are going to keep the full-fledged account. That means each party will maintain the records. And the third one is when transactions are recorded by each party, but they record their own transaction, and under it they generally open joint venture with other co-venturer account. So it is a case when not maintaining separate set of books for joint venture, but every co-venturer keeps records of his own transaction. This will be the correct, what we call, alternative in this particular case. On 31st of March 2023, debtors of a trader and bad debts are 6,20,000 before writing off 15,000. The debtors of a trader are 6,20,000 before writing off bad debts of 15,000. The provision for bad and doubtful debts is 5% on debtors and provision for discount on debtors is 2%. The amount of provision for the discount on debtors will be, in this particular question, slight misprinting is there, and lots of misprintings were there in the questions, no doubt about that. 6,20,000 is the amount of debtors, no doubt about that. And then there are bad debts, because it is written debtors are before writing of bad debts, correct, in this question. So when I will subtract the amount of bad debts, that is 6,20,000 minus 15,000, it will be equal to 6,05,000. So 6,05,000 net debtors. Provision, and now the provision for doubtful debts is to be maintained at 5%. So provision for doubtful debts you are going to maintain at 5%. So 5% will be 14,250. Now I will have to subtract the provision from the 6,05,000. And I will be left up with 5,90,750. Now question is asking us to compute the amount of discount. So discount will be computed on 5,90,750 at the rate of 2%. That comes to 11,815. 11,815 will be your correct answer. Actually, there is some mistake in this particular question. That is why it is not coming exactly, it is coming to 11,495. Let me check it once again, because debtors are given 6,20,000 before writing of bad debts. On 31st of March, debtors are 6,20,000, so 6,05,000, and provision for debtors is 5%, so 6,05,000. Let me compute again. 6,05,000 into 5%. 6,05,000 into 5% is 30,250. It seems actually I have committed a mistake. Just let me check it down. 6,05,000 minus 30,250. So now the balance will be equal to 6,05,000. That is 5,74,750. Just allow me a second. And 2% provision for discount will be 11,495. Yes, it is coming 11,495. But read this sentence as follows. On 31st of March 2023, debtors of a trader are 6,20,000 before writing of bad debts of 15,000. You have to read it this way around, correct? So 11,495, otherwise it is correct answer. 92. Only items of revenue nature pertaining to the period of accounts are shown in the income and expenditure account. I have already told you so many times, actually, when we prepare income and expenditure account, we prepare it on accrual basis. And accrual basis means the period for which we are preparing income and expenditure account, all such expenses which are related to that particular period or income which are related to that particular period will be reflected in it. Excess of higher purchase price over cash price is known as interest, no doubt about that. AS10 is applicable to which one of the following asset? Of course, property, plant and equipment. 95. Goods costing 2,34,000 are sent to branch at invoice price of 3,12,000. Now, in this particular question, cost price of the goods is also given. Invoice price of the goods is also given. Goods costing 2,34,000. It is given 2,34,000 worth of goods have been sent at an invoice price of 3,12,000. Now, if I'm going to take the difference, what will be the difference? Let me check. 312 minus 234. The difference comes to 78,000. Difference is equal to 78,000. Obviously, it will be margin or loading. Now, question is asking us the loading on invoice price will be. So, in order to compute the loading, 78,000, first of all, you write the margin. Then below you write the invoice price and multiply it with 100. So 78 divided by 312 into 100, that comes to 25%. You are right, it is 25%. So 25% will be your correct answer. Represents a potential obligation that could be created depending on the outcome of an event. Of course, it refers to contingent liability, because contingent liability, whether it will materialize into a liability or not, that will be decided by the future outcome of events. Which lease transfers substantially all the risk and rewards incident to the ownership of an asset? Of course, finance lease. Under finance lease, all the risk and rewards are transferred. In which type of lease expenses like maintenance, repairs and taxes are borne by the lessor? Operating lease. Because under operating lease, generally the titleship remains with the lessor. See, in case of finance lease, when we transfer the asset, the lessee is going to use the asset as if he himself is going to be the owner, at least for the lease term. But in case of operating lease, because operating lease generally happens to be for a short period, correct? Here, the lessor will remain the what we call owner of the what we call asset even during the lease term. But at the same time, all the risk and rewards are not transferred. In the sense means all the maintenance, repairs, expenses, etc. in connection with such assets will have to be borne by the lessor. 99. Short-term leases which is often cancelable are known as operating lease. Correct? Operating lease can be cancelled, or revoked, but finance lease cannot be cancelled. A lease which is generally not cancelable and covers full economic life is finance lease. According to AS11, revise the difference between the forward rate and the exchange rate at the date of transaction should be recognized as an income or expense, no doubt about that. Concept assumes that finite life of an organization can be split into smaller periods of equal duration, right? That is accounting period concept. Borrowing cost includes debenture interest, but it will not include preference dividend, it will not include equity dividend, etc. It will include debenture interest. Grants which are in the nature of promoters' contribution is accounted under capital approach. I have told you that whatever grant an entity would receive which are in the nature of promoters' interest are credited to capital reserve. Correct? So capital approach you will write here. Rupees 10 lakh grant received for an asset and life of the asset is 10 years, and income credited to profit and loss account every year under deferred income. Now, actually in this question, it is stated that the entity has received 10 lakh worth of grant. 10 lakh worth of grant. Correct? And it is also given that this grant has been received in connection with an asset and the life of the asset is 10 years. Life of the asset is 10 years. So when entity will receive the grant, entity will write the entry bank account debit to grant account obviously, and this grant, this entity might have taken to the deferred grant account, correct? And slowly and steadily we are going to transfer, correct, some portion of the total grant to each year to the profit and loss account. So for example, at the end of the year when I am going to reach, I will transfer some portion to the profit and loss account. Question is asking on what basis you are going to transfer or what amount you are going to transfer deferred grant amount of 10 lakh to your profit and loss account. Generally, this amount is transferred as per the depreciation charged. Suppose if in the current year we have charged a depreciation of 10,000, then I will take 10,000 to the what we call profit and loss account. So that does not depend upon the life, rather it depends upon the what we call depreciation method, what amount we are going to reflect it in the profit and loss account. Full form of IFRS, Indian Financial Reporting Standard, International Financial Reporting Standard, correct? International Financial Reporting Standard is the correct answer. This is your correct answer. Actually, lots of mistakes are there. Anyway, International Financial Reporting Standards is the correct answer. Areas involving different accounting policies by different enterprises. This question we have covered under AS1 also, correct? Under valuation of inventory, intangible asset, recognition of profit or long-term loans, correct? So even under depreciation policy, entity has the choice and liberty to use any what we call accounting policy or to have what we call any accounting policy. As per AS16, all of the following are qualifying asset. Even this question is actually repeated. Accounting standard in India are issued by Institute of Chartered Accountant of India. As per AS10, property, plant and equipment, an enterprise holding investment property should value investment property. See here, as per AS10, property, plant and equipment, if an enterprise is holding, that means having investment property. What we mean by investment property? Investment property are those properties which are kept by an enterprise for earning rental income, or for the purpose of capital appreciation. For the purpose of capital appreciation means the entity wants to hold this property, and as and when the price of the property will rise in the market, it will be disposed of. That means basically investment property signifies that we want to earn some income out of it. As per AS10, which deals with property, plant and equipment, an entity has the liberty or choice. It can measure property, plant and equipment either at cost or on revaluation model. But at the same time, investment property can always be measured only on the basis of cost model. So that is why your answer will be cost model. 111. In January, a firm took an insurance policy of 60 lakh to insure goods in its godown against fire subject to average loss. And on 7th of March, a fire broke out, destroying goods 44 lakhs. So in this case, it is given that loss of goods is 44 lakhs. Loss of goods is equal to 44 lakhs. It is given already. Also, it is given that stock in godown was estimated at rupees 80 lakh. See here, whatever our stock was there, I do not know what exactly is the amount of stock. But it is given to us that out of that, we lost out 44 lakh worth of stock. And after losing out 44 lakh worth of stock, still 80 lakhs worth of stock is in hand. So now if I am going to add it, I can find out that stock on the date of fire was 124 lakh. Out of that, we have lost 44 lakh worth of stock. No doubt about that. Compute the amount of insurance claim. So for a stock of 124 lakh, now I may say, we have taken an insurance policy of 60 lakhs and our loss of stock is 44 lakhs. So what will be the amount of insurance claim? That is equal to 44 into 60 divided by 124 and you can get the answer. Correct? Answer will be 33 lakhs. So this will be your answer. 112. While treating the abnormal loss under stock and data system of maintaining branch accounts, loading on abnormal loss is transferred to. As you know, loading on abnormal loss is always taken to the debit side of branch stock adjustment account. So now we move over to question number 113. It states that under data system of maintaining branch account, which of the following appears in the branch account? Which of the following will appear in branch account under what we call data system? Only goods sent to branch account will appear. We know that credit purchases will not appear. Similarly, goods returned by branch debtors will not appear. Similarly, goods returned by debtors to head office will also not appear. So goods sent to branch account is your correct answer. As far as 114 are concerned, branches not keeping full system of accounting are called as dependent branches. Such branches which do not keep complete accounting system, that means they are dependent upon the head office, and they are known as dependent branches. Is it clear to you? Departmental accounting helps in evaluation of trading results of each department separately. Yes. Effective planning and control on each department. Yes. So your correct alternative will be both 1 and 2. 116. If Department M transfers goods to Department N at a price of 50% above cost. 50% above cost. So cost price is 100. Margin is equal to 50. Margin is equal to 50. Margin is 50. So that means the selling price is equal to 150. So rate of profit on selling price will be 50 by 150, that is equal to 1/3. Correct. Further, it is written what will be the amount of stock reserve on unsold stock worth 9,000 of Department N. Actually, in this particular question, it is written that M transfers goods to N. M transfers goods to N. That means whatever goods which are required by N are transferred by M. Now question says that closing stock of Department N is 9,000. Because it is clearly given in the question that goods are transferred by Department M to N. So whatever goods which are remaining, correct, with Department N, that means these goods must have been transferred by Department M. So in order to know the unrealized profit or stock reserve as we call it, so we will have to multiply it with 1 by 3, and the correct answer will be 3,000. Further, under 117, it is given that goods are sent to branch at cost plus 50%. So cost plus 50%. So rate of profit on cost will be equal to 1 by 2, and rate of profit on invoice price will be equal to 1 by 3. 1 by 3 also means 33.33%. The head office of a company sends goods to branch at 150% of its cost price. See, if cost price is 100, that means goods are sent to branch at an invoice price of 100 plus 50, 150%, you can say 150%. If cost price is 100, then goods must be sent to branch at 150. Is it clear to you? Further, it is written if the value of the goods received by branch is 7,50,000. You have sent the goods to the branch, and branch have received total goods worth rupees 7,50,000. These goods must have been supplied at invoice price without any doubt, because it is clearly written in the question that head office sends the goods costing 100 at the rate of 150. That means the margin is actually 50. So rate of loading on invoice price will be 50 by 150. Now question is simply asking you, then what will be the cost of the goods? So in order to know the cost of the goods, first of all, I will have to find out the loading. So loading will be 50 by 150, that is 1/3. If I am going to apply 1/3, it will be equal to 2,50,000. So 2,50,000 is the loading, so cost of the goods must be equal to 5 lakh. So 5 lakh will be your correct answer in this case. 119. Goods are sent to branch at cost plus 25%. So invoice price loading will be equal to 20%. I need not require to elaborate it because so often we have done such questions. Head office invoices goods to branch at 10% less than the catalog price, which is 20%. Head office sends goods to branch at 10% less than the catalog price, and catalog price is cost plus 20%. See, under such question, you will have to presume that cost price is 100. And it is written that catalog price is cost plus 20%. So if I am going to add 20% to it, I will get the catalog price, that is also known as list price. Correct? Catalog price or list price is one and same thing, 120. And now the question states that goods are sent to branch at 10% less than the catalog price. Catalog price is 120 and goods are sent at 10% less than the catalog price. So that means goods must have been sent at the rate of 108. Is it clear to you? Now, if the total invoiced goods during the year is equal to 4,32,000, then the cost of such goods is. So in this case, as you know, there are three prices. One is cost, which is 100. Then your list price or catalog price, which is equal to 120, and your invoice price is equal to 108. Now, difference between cost price and invoice price is equal to 8. So rate of loading on invoice price will be 8 by 108. Now it is given in the question that goods have been invoiced at 1,32,000. This is the invoice price of the goods. So if I am going to apply this rate, I will be able to find out the loading. Now the loading will be 4,32,000 into 8 divided by 108. That is equal to 32,000. So loading is equal to 32,000 and the cost price of the goods will be equal to 4 lakh. Is it clear to you or not? So this will be your answer. In question number 121, it is stated that average profit is 3,72,000. Normal rate of return is 12%. Your average profit is given in this particular question, which happens to be 3,72,000. 3,72,000 is your average profit, number one. Number two, it is also given that normal rate of profit is 12%. So, also we are given total assets 68 and outside liability 42 lakhs. So that means in order to compute the capital employed, I will have to subtract the liability from the assets. 68 lakh minus 42 lakh. 68 lakh minus 42 lakh. It will give me the capital employed. Is it clear to you? Or the net assets you can say. So 68 minus 42. That is equal to 26 lakh. So 26 lakh is the capital employed. And normal rate of profit now we can find out. Normal rate of profit given to us is 12%. So we can apply 12% to it. So 26 lakh into 12% will be equal to 3,12,000. 3,12,000. Now I am going to subtract normal profit from the average profit. We will get super profits, that is equal to 60,000. And goodwill is to be computed. Here actually question is stated that calculate the value of the goodwill under capitalization method. Under capitalization method. Actually under capitalization method, now you have got the super profit. If you remember under admission of partnership, I told you that under capitalization method, through shortcut you can also find out the goodwill. You can simply capitalize the super profits. You divide it by normal rate of return and you can get the amount of goodwill. So 60,000 into 100 divided by 12, that will give you 5 lakh. So 5 lakh will be your answer. Is it clear to you? 122. The profits of the last 3 years were 42, 39 and 45,000. Find out the goodwill at 2 years purchase. You can easily find out, simply find out the average profit, take the average of these three items, multiply it with 2, you can get 84,000 easily. Excess of average profits earned by a firm over and above its normal profit, I just told you it is equal to super profits. Then as far as next question is concerned, in this question it is written that closing capital employed of Mr. X was 4 lakh. So in this particular question, it is given closing capital employed. Now this is your capital employed. This is your capital account. Now balance carried down. Closing capital employed is already, in fact, 31st of 3, 2023. This is our closing capital employed is given to us 4 lakh. On 1/4/2022, his capital was 3,50,000. So balance brought down is equal to 3,50,000. This is your opening capital. His net profit for the year ended 31st of 3, 2023 is 1 lakh. Now net profit is always credited to the capital account. I need not require to tell you that is equal to 1 lakh. He introduced 30,000 as additional capital. So by cash. Cash account debit to capital account. Additional capital he brought in to the extent of 30,000. 30,000. I will write 30,000. Find out the amount drawn by Mr. B for his personal expenses. Now whatever balancing figure which you are going to get, that will be considered his drawings. Is it clear to you? That is how you can easily find out the amount of drawings. 3,50,000, 4,50,000, 4,80,000 minus 4 lakh. So 80,000 is the correct answer. So 80,000 will be your answer in this case. 125. A trial balance as at 31st of December contains the following information. 12% bank loan. 12% bank loan, and the bank loan is actually 50,000. If your bank loan is 50,000 and 12% is the interest, so logically in the current year's profit and loss account, this much of interest you must have had shown. Is it clear to you? Because interest related to current period is 6,000. However, you have paid interest of only 3,800. We have paid 3,800. So that means outstanding will be 2,200. And total interest which we are going to debit to P&L will be 6,000. Is it clear to you? So total interest which we are going to debit to P&L will be 6,000. 126. Find out the gross profit or loss. Purchases 30,000, sales 15,000, carriage inward 2,400, opening stock 10,000, purchases return 1,000, closing stock 36,000. All you have to do is to simply prepare a trading account. In the trading account, you will write on the debit side purchases, you will write on the credit side sales, you will write carriage inward on the debit side, opening stock on the debit side, purchases return you can subtract from purchases or you can show it on the opposite side, and closing stock on the credit side. So the difference will be your gross profit or loss. In 127, it is stated that opening stock 1,50,000. Cash sales is 1,20,000. Credit sales is equal to 2,30,000. That means total sales is given. Closing stock is nil, it is also given. And selling price is 125% on cost. Compute the amount of purchases here, it is written. So again in this particular question, you can find out very easily by preparing a trading account. By preparing a trading account, you can easily find out the amount of purchases. For example, because everything is given in this particular case. Your opening stock is given to you as 1,50,000. So you are going to write here 1,50,000. Correct? Opening stock you have written. Total sales, cash sales is given to you as 1,20,000. So you are going to write here 1,20,000. Credit sales is also given to you. You are going to write here credit sales amount is equal to 2,30,000. So total sales is equal to 3,50,000. Closing stock, it is stated in the question, is nil. And selling price is 125% on cost. Selling price is, it means actually if cost is 100, selling price is 125. So the difference between these two will be margin. This is your cost, this is your profit, and this is your selling price. So rate of profit on selling price will be 25 by 125. So your gross profit you can now find out by applying this rate 25 by 125. So 25 by 125 of 3,50,000 will give you gross profit. So 3,50,000 divided by 5, 70,000. So 70,000 is your profit. Now the balancing figure will be your purchases. The balancing figure will be your purchases, 350 minus 70 minus opening stock 150. So purchases will be equal to 1,30,000 and this will be your answer. Is it clear to you or not? Purchases will be equal to 1,30,000. This is how you are going to compute the amount of purchases. If a trader's net sales amount to 18,000 and his gross profit is 60% of the sales and his net profit is 40% of the sales, his expenses are. Now in this particular question, first of all, it is stated that net sales is equal to, now net sales is equal to 18,000. Fine. Net sales 18,000. Gross profit is already given to you. Gross profit is 60%. So we compute 60% of 18,000. So 18,000 into 60%, that is equal to 10,800. So this is our gross profit. This is our gross profit. We know that when we prepare profit and loss account, we write gross profit on the credit side. Correct? When we prepare profit and loss account, we write gross profit on the credit side, and after subtracting various expenses, we get the net profit. Now, in this question, it is stated his net profit is 40% of the sales. Now, I am going to compute 40% of sales. 18,000 into 40%. That is equal to 7,200. So if now I can take the difference because my gross profit is 10,800 and net profit is 7,200. So the difference between these two items must be expenses. So expenses will be 3,600. This is how you can find out the amount of expenses. Is it clear to you? Similarly, in this particular case, question number 129, it is stated opening inventory is 9,600. Purchases less return is 11,850. You are going to write opening inventory on the debit side of trading account, purchases on the debit side. Salary will not be written in trading account. It will be written in what we call P&L account. Wages you will write, commission on purchases you will write, carriage outward you will not write. Carriage outward and salary you are going to put in P&L, not in trading. Then you are going to write sales, closing inventory, even carriage on purchases, and then you can get the amount of gross profit easily. In this question 130, it is stated that income and expenditure shows a subscription of 10,000. Now, so many times we have done such questions anyway. Let us say this is our subscription account. This is our subscription account. Because it is given that as per income and expenditure, subscription amount is 10,000. So I will write here income and expenditure 10,000. Correct? Now we are also given that subscription accrued in the beginning of the year 1,000 and at the end of the year that is 1,000. Subscription outstanding or accrued in the beginning 1,000 and closing outstanding also is 1,500. Question is asking us what exactly is the amount of subscription which need to be reflected in the receipt and payment account. So now the balancing figure, whatever which we get, which will be equal to 9,500. So this figure will be reflected in receipt and payment account. 131. From the following details, estimate the capital as on 31st of 3/2021. I have already told you how you will have to actually attempt this question. First of all, you will have to prepare the capital account. Because opening capital is given, right balance brought down. Drawings are given, put it on the debit side of capital account. Profit, put it on the credit side, and the balancing figure will be your closing capital. 132. X sold goods to Y for 3 lakh. Half of the amount will be received in cash and balance through bills receivable. For what amount X should draw a bill on Y? Very simple. Out of 3 lakh, one half I am receiving in cash, 1,50,000 I am receiving in cash. So for the balance, I will have to draw a bill and the balance will be 1,50,000. 135. On 1st of April, Mr. A sold goods 10,000 to B and drew a bill for 3 months. And Mr. A discounted the bill with the bank at 15%. What will be the amount of the discount? So 10,000 is the amount of the bill. And we discounted it at the rate of 15%, and it will be presumed that we are discounting it 3 months prior to the maturity date. Correct? So whatever discount which we will get, that will be your answer. Next question is 136. A purchased goods costing 42,500. B sold goods costing 40,000 at 50,000. Actually, A has purchased the goods. A purchased the goods for rupees 42,500. And B sold out of 42,500, 40,000 worth of goods at rupees 50,000. Out of 42,500, 40,000 worth of goods have been sold at 50,000. Balance of the goods were taken over by A. Balance of the goods were taken over by A at rupees 4,000. The profit on joint venture is, see, under joint venture, we are not concerned with the amount of closing stock remaining. So this will be your profit 54,000 minus 42,500, 11,500. Now, as far as question number 139 is concerned, in this particular question, it is given that A sends out goods costing 2 lakh to B. So in this particular question, A is sending the goods costing 2 lakh to B, and further it is mentioned that consignor's expenses rupees 5,000. And consignor expenses are 5,000. Consignor's expenses in relation to sales are 3,000. And 4/5 of the goods were sold at 20% above cost. Correct? Consignor's expenses 5,000. And consignor's expenses in relation to sales, actually it should be consignor's expenses. Lots of misprints are there actually. It actually not from our side, from the what we call material, which is given by the institute itself. Anyway, 4/5 of the goods were sold at 20% of the profit. The profit on consignment will be, the question is asking profit on consignment. In order to know the profit on consignment, you will have to prepare the consignment account. This is how you are going to prepare consignment account. Correct? In the consignment account, you will write here 2 goods sent on consignment. 2 goods sent on consignment, that is equal to 2 lakh. Consignor's expenses 5,000. These are consignor's expenses actually. And then consignee's expenses. These are consignee's expenses. Consignee, that is B. Consignee's expenses with respect to sales is 3,000. And then we will write here by B because consignee has sold out 4/5 of the goods. 4/5 of the goods were sold at 20% above cost. First of all, we need to understand that this is the cost. 2 lakh worth of goods were sent and 4/5 of the goods have been sold out. So first of all, I will have to compute the 4/5. The 4/5 will be equal to 1,60,000. 4/5 of the goods were sold at 20% above cost. At 20% above cost. So I will simply add 20%. 20% will be equal to 32,000. So that means these goods have been sold at 1,92,000. So this will be 1,92,000 you are going to write here. Also, it means 1/5 of the goods are in the stock. That is 40,000 worth of goods are in the stock. Number 1. Correct? Now we will have to do the valuation of the stock. In order to do the valuation of the stock, I will have to add the proportionate expenses of the consignor because the consignee's expenses are indirect expenses because those expenses are related to sales. So proportionate expenses. So total expenses of the consignor is equal to 5,000 and 4/5 of the goods have been sold and 1/5 of the stock is remaining. So the proportionate expenses will be equal to 1/5. So you can simply compute 1/5 of 5,000. So that means 41,000 worth of stock is there. So your consignment stock will be equal to 41,000. 41,000. And nothing else is mentioned in this particular question. 4/5 of the goods were sold at the profit on consignment. Actually, no commission information is given in the question. So now we will compute 1,92,000 plus 41 and we are going to subtract 2,08,000. So that comes to 25,000. So 25,000 will be your profit in this particular case. Is it clear to you? So 25,000 will be your profit. In question number 140, it is stated that a second-hand car purchased for rupees 2 lakh, excluding initial repair cost of 50,000. Because we have purchased a car of rupees 2 lakh, excluding initial repair expenses of 50,000 is sold for 1 lakh. Important point is that even though I am purchasing a second-hand car, whether it is second-hand car or third-hand, I am not interested in it. What I am interested in is that my purchase price is 2 lakh and after I have purchased this item, I have incurred some expenses in connection with this item. So repair expenses will be capitalized because this cost is excluding repair cost of 50,000. So because first time we are purchasing this item, so in that case repair expenses on that item will be capitalized. So the total cost of the item will be equal to 2,50,000. And this has been sold after 2 years for rupees 1 lakh. If depreciation is charged at the rate of 20% on written down value, so depreciation at the end of the first year will be 50,000 at the rate of 20%. So written down value at the end of the first year will be equal to 2 lakh. Then in the second year, I'm again going to charge the depreciation, which will be equal to 40,000. So the written down value at the end of the second year will be equal to 1,60,000. And at the end of the second year, we sold it out for rupees 1 lakh. So that means my profit will be 60,000. Sorry, in this case, my loss will be 60,000 because 1,60,000 worth of item is being sold out for rupees 1 lakh. 141. X drew a bill of exchange on Y for rupees 20,000 payable after 3 months. So in this particular question, there is a party by the name of X, another party is Y, and X has drawn a bill at 3 months for rupees 20,000. Correct? On the due date, that means when we approach the due date, Y could not make the payment and he requested to renew a fresh bill for 3 months at 12% per annum. After 3 months have gone by, we did not receive the money because Y failed to pay the money and he asked to renew the bill. That means he is asking us to draw another bill upon me. Well, and another bill will be drawn for another 3 months. 3 months have already gone by, and after 3 months we will draw another bill upon Y. A new bill we are going to draw, and that bill will also be of 3 months. Now, because we did not receive the money on the due date, and now we are drawing another bill, and now we will receive the money after 3 months. So a delay is being created. So when we are going to draw the new bill, we are going to charge the interest for this particular period, for the 3 months, correct? Because we did not receive the money on the due date, and now we will have to wait for another 3 months. So we are going to charge interest for that. Now question is asking, requested to renew a fresh bill for 3 months at 12% interest. The amount of fresh bill will be. What will be the amount of fresh bill? Now, in this particular question, amount of fresh bill will be 20,000 plus interest for 3 months. So you are going to add interest. So interest will be 20,000 into 12% for 3 months. For 3 months. 3 by 12. That will be equal to 600. So 20,600 will be your answer. Is it clear to you? Contingent liability would appear as a note to the balance sheet. A company is a going concern if there is no evidence that it will have to cease operation within the foreseeable future. Obviously, we always presume that entity is a going concern unless there is a clear-cut evidence that this entity is going to cease the operation in the foreseeable future. Which of the following error or omission is not part of the bank reconciliation process? Wrong totaling of cash column of the cash book, correct? So it will not be considered for the reconciliation process. X draws a bill on Y for rupees 1,80,000 for mutual accommodation in the ratio of 2:1. We have already done this particular question earlier. Some questions have been repeated. 1,80,000 is the amount of the bill which has been drawn by X upon Y for mutual accommodation. After receiving the bill, X will get the money, and X will, because their ratio is 2:1, so X will keep 2/3 of 1,20,000 and 1/3 he will remit to Y. So point here is that before the maturity date, now it is the duty of the X to pay actually Y so that he can ultimately honor the bill at a figure of 180. So 120 will be answered in this particular case. 146. P and Q enter into a joint venture sharing profits and losses in the ratio of 3:2. We have done this particular question if you remember earlier, and in that question answer was 15,300. So 15,300 will be your correct answer. In a case of a club, the excess of expenditure over income is known as deficit. Obviously, in case of NPOs, not-for-profit organization, if your expenditure side would be more in comparison to your income side, obviously the difference will be deficit. Which of the following will not appear in the profit or loss account capital? Of course, if your opening capital is 70 and closing capital is 90, then what is the amount of profit or loss? Quite obviously, your closing capital is higher than opening capital, the difference will be profit. Operating lease is a revocable contract. I have already told you so many times earlier that finance lease is a non-cancelable, but operating lease can be cancelled, can be revoked. So these are the 150 questions, correct, which we have selected out of MCQs, out of what we call MTPs, and out of what we call various past papers of new syllabus, and besides the what we call question bank which has been released by the institute. Unfortunately, there are some errors in it, and we on our side actually tried to rectify the same, correct, and we have done level best effort to see to it that you get the what we call best possible reasonings for the answers. So on such count, we finish up this particular session. I hope that this particular session must have come up to your expectation a wee bit. So looking forward to have your what we call comments, and looking forward to have your suggestions too. And with the very best of luck for your upcoming examination, we pray to the Almighty that each one of you come out with supreme and flying colors. So on that count, I take leave of you now.